So Alphabet recently reported their quarterly financial results, and the management team held a conference call with Wall Street investors where they explained the latest developments at the business. I find these conference calls extremely informative, and I try to digest these from all of the companies that I have rated highly, in the companies of the stocks that I own and the companies of the stocks that I recommend. Alphabet is one of those. I own it. I also have it ranked as my top stock to buy right now. So two things stood out to me from this conference call with Wall Street analysts, and one of them was related to the company's Waymo division, the driverless car division for Alphabet, and the other one was developments in the search engine business. These are two things that I've been looking at with the company, the Waymo driverless division being a potential huge upside opportunity for the future, and the search engine business being the current big opportunity, the big cash cow right now that is under threat by other large language models like ChatGPT. So I'm always hypersensitive to information regarding the company's search engine business. So let me share with you some details about these two big categories for Alphabet here. I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So Alphabet reports this other bets segment where this is an area the company is investing for potential huge upside opportunities. And these are still money-losing segments. These are still money-losing businesses that could have huge upside. And one of those money-losing businesses in its other bet segments is Waymo, the driverless car division. Now, if you're in one of the cities where Waymo is operating in, which I am in Los Angeles, I see these driverless cars all the time, every single day. They're everywhere now. And some of my viewers were pointing out that they're also seeing them everywhere in San Francisco. They've made deals to expand. So recently, they talked about this segment as it's become a more important part of the business. It's the biggest part of their other bets portfolio. And they say that Waymo is now a clear technical leader within the autonomous vehicle industry, and it's creating a growing commercial opportunity. Each week, Waymo is driving more than 1 million fully autonomous miles and serves over 150,000 paid rides, the first time any AV company has reached this kind of mainstream use. So their development is strong, and it's been increasing. It's been accelerating in recent months, going more widespread, adding use cases, adding customers, adding the amount that they're offering in the various cities. Now, one of the headwinds, or I shouldn't say headwinds, but one of the constraints of Waymo is how expensive each vehicle is, and the fact that they are constrained to locations like Los Angeles and San Francisco. They can't go from, let's say, Los Angeles to Las Vegas or operate in other cities because of certain constraints like the geofencing and the mapping and the availability of these vehicles and the cost and so on, permitting for local cities. But the fact that they're offering 150,000 paid rides every, week, that's pretty impressive already. And even if they don't become widespread, like national, let's say they have to be within these cities, that's still a huge opportunity for this segment. So they can be, let's say, in Los Angeles, San Francisco, San Diego, Las Vegas, Dallas, Chicago, Miami, New York, all of the big cities, London, Paris, around the world. And those are the big markets. Do you really want to be in Wichita, Kansas, or do you really want to operate in some of these smaller areas where there aren't enough customers and there isn't enough demand to operate this business effectively? I'm not so sure. These are still very early days of this driverless technology, and I'm not so sure what demand is going to look like for this technology. I know Tesla stock investors are extremely bullish about the potential for Tesla to develop this technology, but they're already so far behind. Waymo is already out on the roads offering 150,000 rides per week, And if they capture these big markets, then what's going to be left for the latecomers like Tesla when they come out with, or if they ever come out with the robo-taxi, if all of these large cities around the world are already spoken for with Waymo cars and others that are already out there, I don't know what that's going to mean if they're going to just say, you know what, forget about this, it's not worth it. Waymo is already there offering these rides. So they went on to say that Waymo will bring fully autonomous driving to more people and places. They've already expanded the network, and they just recently signed a partnership with Uber for Austin, Texas, and then Atlanta, Georgia, as well as a multi-year partnership with Hyundai to provide the vehicles and thereby lowering the cost per vehicle and getting this technology out there. The 6th generation system with Waymo has significantly reduced unit costs without compromising safety. And as they're out there offering these rides, collecting data, getting feedback from customers, that's iterating the system each and every day, and they're getting closer and closer to offering this more widespread. So I say this again, investors that are bullish in driverless car technology, there are so many other better ways to play this trend than with Tesla stock. Tesla stock trades at a valuation that's more than 4 times that of Alphabet when measured by the forward price to earnings ratio. So there is another way you can play that driverless car technology trend if you're really bullish on that technology, which I'm not. I'm not really bullish on the driverless car technology. I understand there's upside there and there is potential there, but I don't think it's just going to be this clear home run that everyone's going to want to use and it's going to be a big profit driver for all of these companies. I'm not that convinced yet. All right, so the next segment they go on to talk about is search. And nowadays, there's so many more cases, right? They're saying that whether you're using voice to find answers or opening your camera to explore the world around you, people are expanding how they ask questions in search, as well as the type of questions they ask. And so Alphabet's saying that these new behaviors create new opportunities. And the way I see it is there is an increasing demand for search, because of people are now searching when they're out and about instead of just when they're home and on their computers, or at home and on their phone when they get an opportunity. Nowadays, when you're out and you see something, you can open up your camera and do a search. And so this is driving increasing search demand. And that's great news for Alphabet because they are the go-to search engine still worldwide. They have the highest market share in this category. Then they go on to say that AI is supercharging search. Their new AI-powered features make searches more helpful, and they're continuing to see great feedback, especially from younger users. AI is also helping Alphabet understand intent and then to connect people with advertisers. And that makes advertising more effective, and that makes user engagement more effective if you get connected more accurately to what you're looking for. Obviously, in most cases, when you're searching for something, it has something to do with a business. And there is some business that will benefit from your interest, right? You're interested in something. You're interested in getting information about something. And there is a business on the other side of that that could benefit by providing you the information, by providing you the product, by providing you the service. And so the better Alphabet understands your intent, what you're looking for, the better it can match you with businesses. And that way it creates more effective advertising opportunities for businesses that can market to customers that are in their target audience. You don't want to advertise to somebody who's not in your target audience, because then you're just annoying people and you're worsening the perception of your business among those people, and you're wasting dollars on customers that are never likely or very unlikely to be your customers in their lifetime. And already Google Lens is used for almost 20 billion visual searches, 20 billion visual searches every month. And this is a brand new use case that wasn't around a couple of years ago for Alphabet. Now they have these incremental 20 billion searches that are happening on Alphabet. So good developments here from Alphabet. Interesting to follow these. It's great to see the Waymo segment getting so advanced here, because it was in a segment that was really just, it's a long shot, right? That's what Alphabet thought of it. And now it's turning into something that's becoming a lot closer to actually generating positive profitability, positive cash flow for the company longer term. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.